You know, after being a professional trader now for 26 years and testing hundreds of indicators, strategies, and countless variations thereof, I believe I have found what is the best trading indicator to use for all of the new and aspiring traders out there who are ready to level up their game and make more consistent trades. And that indicator is the 9 exponential moving average. It's also known as the 9 EMA because the 9 EMA is both simple and it's powerful. I mean, it's simple enough that the damn thing is already pre-programmed into your brokerage account. All you got to do to start using it is just click a button and right there it is on your screen. No filters needed, no complex mathematical equations, and no mess. Just click the damn button. It can give you the clarity you need to separate those really high quality trading opportunities from those duds you should have avoided in the first place. But the best part about the 9 EMA, it can give you those sniper entries to just put you in the best possible position to be successful in the first place. However, as with all trading indicators, if you don't know how to use them the right way, they're just going to come back and haunt you later. So what I'm going to do in today's video is show you how to use this 9 EMA like you are a pro. The same way I am using it day in, day out to pull monthly profits from the market. The same way I've showed it to the members of our live trading community who are using the 9 EMA on a day-to-day basis to manufacture great trading opportunities. And as always, everything that I say and do in this video and what I show you, I will back it up with a series of live trade examples using the 9 EMA in a live market. That way there is absolutely no questions on how to execute this to perfection. So let's get started. Now, before we get involved in all the strategies and the juicy details, we need to make sure we're all on the same page and we have this 9 EMA set up correctly on our charts, especially if you want to get the most out of it, which I imagine that you do. We also need to make sure that we're using the best time frames to get the most out of that 9 EMA as well. Now, like I mentioned there in the introduction, this is pretty simple to do because the indicator is already pre-programmed into your brokerage account. You just need to click a button. But what I'd like to do in this section is I just want to tweak that for you a little bit to get you right to that sweet spot you need to be to make quality trades. So here's what we'll start with. Take whatever chart you're trading, don't care what the asset is, and just for example, you'll see in the upper left corner, I'm going to be using the NQ futures for today's example. However, there are two things that we must have on this chart to get the most out of the 9 EMA, starting with the time frame. Now, because the 9 EMA is the fastest yet most reliable indicator, it's used highly among scalpers and day traders. So your very best signals are going to come from your smaller time frames that are sub 1 hour. Now, it'll definitely work if you're using a time frame higher than 1 hour, but if you really want this thing to excel the best that it can, it needs to be a 1 hour time frame or less. And as you can see in the upper corner here, I'm using my all-time favorite, the 5 minute. The second thing that is important to getting this set up correctly is you must make sure that you have 24-hour data enabled on your charts. Now, if you're trading a 24-hour market like foreign currencies, cryptocurrencies, and futures, you're good to go. You're going to have that consecutive data on that chart. However, if you're a stock trader, you're going to have to make sure you have pre- and post-market data enabled. Otherwise, the indicator is going to be slightly off, and that is not what we want. Now, once that has been accomplished, which is a very simple thing to do, we're just going to click that button and get that thing set. So if you take a look at the top of my screen, you'll find something on your brokerage software, and maybe you're using TradingView like I am. Just click the drop-down menu, and you'll see I already have it set. Moving average exponential, not simple, not weighted, just moving average exponential. And we'll talk about what the differences are here in just a second, but you're going to click that button and it's going to put a line on your chart. The next step here is you want to look at some area or click on your chart, depending on the brokerage you'll use. And you want to make sure that the 9 period has been selected. If it, in most cases, it in fact will be, but if it's not, what you want to do is just click on the settings menu and make sure that it says 9. Like for example, Thinkorswim will automatically put the 50 up there. Now the rest of this stuff, like I said in the intro, does not matter. You don't have to touch any of these filters. Just click on the indicator and that line is on your chart. Now, once we have this 9 EMA set up correctly on our charts, we can start talking about the first of 2 strategies that we'll be discussing today using this 9 EMA. And the first one we'll talk about is the most primitive, simplistic, and effective trading strategy using this indicator. And it's something I call the buy, cross, sell method, or its alter ego, the sell, cross, buy method. Now, don't worry if you don't understand that lingo. We're going to kind of layman term that thing here in just a second, but go ahead and write that down and I'll show you exactly what I'm talking about right here on the screen. So let's say, for example, this line I've drawn represents the 9 exponential moving average. Here's what we want to do. If the price of the asset we are trading is at or above that 9 EMA, right? We want to buy that asset. And we want to remain buyers or stay bought in that asset until the price crosses through. Then and only then do we sell, okay? Buy, stay bought, remain bought, continue buying until you cross, then you sell. So just think about that for a second. We're going to talk more about it. The next, if the price of the asset is trading below that 9 EMA, we want to sell, remain selling, or refrain from buying until the price of that asset reclaims that 9 EMA and crosses through. Then and only then do we buy. So that is sell, cross, buy. Now, don't worry if you didn't get it. I'll show you exactly what it looks like in a real-time environment because it may sound just too simplistic to work, but bear with me here. So let's go back and take a look at our NQ chart. So you'll see our blue line represents that 9 EMA, and we can do our very first quiz for today, which should be a total layup for you guys at this point. So based off of the information you collected in this video, is the current price of the NQ futures trading above or is it trading below that 9 EMA? I mean, this is simple, right? It's clearly below the 9 EMA, which means we have what? The sell, cross, buy method. That's the strategy we're going to use, which means because it's below that 9 EMA, we are going to be what? Sellers. And we're going to stay selling, remain selling, and not even think about buying until it crosses back above that 9 EMA, correct? So let's just go ahead here and do a trade. Let's go ahead and sell that thing based off of where it is. Now, obviously, this is a demonstration because in the live market, you can get a heck of a lot better entry than this. And I'm going to show you that in just a second. But let's go with the primitive, stupid, simple method of just sell, cross, and buy. So I'm going to go ahead and just move this tape a little bit forward here, right? Let's do a couple of bars. And let me just ask you, is the current price, let me get that out of the way, is the current price of where the NASDAQ is now, is it still below the 9 exponential moving average? The answer is yes. So what do we do? Think about it. What do we do? What do we do? We continue to hold the trade, correct? Because we're not going to cover this. By the way, for the new people, cover means buying back when you're short, you're profiting. We'll get into that in a second as well. But we're not going to touch it, right? We're still in the trade. Let's move a couple of bars forward. What do we got? Are we still below that 9 EMA? The answer is yes. So what do we do with this current trade? Do we take the profits? Do we get out of this trade? No, we are not going to get out of this trade until what? Until it crosses back through that 9 EMA. Very, very simple. Let's go ahead and move it forward here and get a couple of different chart views because when you're in these, right, they kind of look different. They kind of fool you. Let's kind of move it a little bit forward there. What do we got here? All right. Is this still below the 9 EMA? Yep, certainly, right? So what do? We keep it, correct? Let's just keep rolling that tape forward. Still in it? We still in it? Yep. Okay, we move it. Still in it? Yep. We still in it? Yes. Are we still in it? Still in it? No. So we would cover that position right there on the cross of that 9 EMA. Okay, but just take a look at that chart, kind of visualize it, and we're going to move to another one here real quick. So here's another day of the NASDAQ chart. We're remaining on the 5-minute time frame. So here's your second part of the quiz. Is the current price of the NASDAQ futures above or below that 9 EMA? Easy, right? It's above. So this would be the what? The buy, cross, then sell method, right? So what we're going to want to do or want to be here to get on the right side of the market is we're going to be buyers. And again, this is just an example. I'll go ahead and hit the buy button there. We can obviously get a much better price than this, which we'll discuss in a second, but that's the rule. Now, based off of what we've been discussing up to this point in the video, we're going to do what? We're going to buy it, remain buying it, continue to stay bought in it until that price crosses back through that 9 EMA. Then and only then are we going to sell it. So let's go ahead and move this forward. This should be real easy at this point. Are we still above the 9 EMA? Yes, right? We are. Let's move it forward a little bit more. Are we still above the 9 EMA? Yes. What do we do with this position? We remain in the position until that price crosses. Let's go ahead and move a little bit forward. Are we still in it? Yes. Are we still in it? Yes. Are we still in this trade? No, we're not. Okay. So now we're out of the trade because of that crossover. Now, I'm sure for a lot of you, you're thinking at this moment, and trust me, I don't blame you for thinking this way because I certainly would too. You're probably thinking, there's just no possible way trading can be that simple, can it? Well, the answer is, yeah, it kind of is. And you can go a long way in your trading journey, make some fantastic trades and trading decisions just off that primitive method of buying and selling through 9 EMA crosses. However, as with all trading indicators and strategies, what separates the average from the superstars are those little tiny tweaks they make to the process. Now, you remember that part where I said, this is just an example. You can get a much better entry. I want to show you how you can make a small tweak and take what I just showed you, that basic primitive method, and turn it into something special by getting a much better entry. Let's go back and take a look at that NASDAQ chart. And what we're going to talk about is the retest method, just to make sure you're getting the best entry and, more importantly, you're on the right side of the chart. Now, anybody who's traded for any length of time knows that if you open up and you have one red candle or one green candle, it doesn't necessarily mean that's where it's going to stay. There's a lot of times it'll just power a tower or rip right back to the upside. And that's what you want to make sure. You don't want to rush those entries. Inverse relationship, if it was higher, the next one could just be a complete blowout. So what I want you to do, or what I am going to do at this point, is I'm just going to move forward to that very next candle, and I want to show you something. Notice that the secondary candle, the very second candle, 5-minute candle in the sequence, try to reclaim that 9 EMA. Now, later when we get into the second strategy, I'm going to give you a little kind of tidbit or forward thinking here. Remember that comment. They want to kind of come back a lot and revisit that 9 EMA. This is what makes it so powerful. It's like the ultimate trend guide, the ultimate balance of power. But notice here on the second candle, it got rejected right off of that 9 EMA. That second rejection would give you probably 15 to 20% better accuracy in gauging as to whether or not this is going to continue to go lower, which in fact it does. So in this case, I want to show you how valuable this is. My entry on this would have been over 23,380 versus the entry, for example, that was at 23,357. Now that's about 25 points or so, or 30. However, at 20 points a contract on a full NQ, that's a big deal. And there's a good chance for the new trader, if you chase that opening candle, that quick bounce, right? Because it's happened to all of us, that quick bounce took us out of the trade. So what adds authenticity to it, rather than just aggressively running through that bar, is to wait for the retest. Now, let me show you how else this can happen to you, because this is a real live situation that happens to people when they trade markets, right? Take a look at this next bar. Let's focus on the next bar here. The third one. If you missed the first cross early in the day, failed to catch the second one, let's say you're just missing everything, which sometimes we do, the third bar did it again. And the third bar, the more times, the more bars that accumulate above or below, the more likelihood that trend is to continue. So even if you're like, damn, this is just too low, I can't chase it down there. As long as it's under the 9 EMA and you're using that 9 EMA crossover and it gets rejected off the 9 EMA or bounces if it's going up, you're still good to go in the trade. This helps us with things like anxiety and FOMO and chasing and just getting on the right side. I mean, that's 90% of the battle for a trader, is to get on the right side of your trades. Now, I want to kind of fast forward it here to the cross back over. And notice that at some point during the day, the price crosses back over. So in this case, we do what? We're now on the other side of that trade, right? We're taking the same instrument, but instead of sell, cross, then buy, we're now buying, cross, sell, correct? So you go through this, you now are a buyer. Now the aggressive entry would be right through that. So let me just go ahead and throw a buy on there as an example. But again, I want to show you something here that's important about for the newer traders. It's the retest. Let me just move to the next bar and open this up. Take a look. Even though it's kind of minute to some degree, there still was an attempt, right, at trying to reclaim that moving average, right? The exponential moving average, excuse me. It doesn't matter if it's all the way in or slightly below, but there is your signal. There was just that little cheater candle that came in. And in this case, rather than getting an entry at 23,123, you're almost down towards 23,110. So you're saving on the entries, which gives you a little bit more room. And once that's been confirmed, that means the market's intentions or the buy programs that may be programmed into the market are going to hold this up. So again, we'll walk through the example. Are we still above the 9 moving average? Take a look at the aggression. Once you pile through that, look where it goes. So again, you can take that basic primitive strategy and really take it to another level by just waiting on that tiny bit of confirmation. And like I said, it can probably increase your hit win rate or whatever you'd like to call it by 15 to 20% and just give you that extra confidence you need. Now, having said that, I want to move on to the second strategy that I'll be sharing with you today, which is by far my favorite strategy, the one I use the most, and I'm going to call it the separator. Now, if any of you watch my past VWAP video, I've actually done a couple of them, and this is a trading strategy that's a carbon copy of that VWAP separator trading strategy. And much like the VWAP, the 9 EMA and the current price of the asset at some point, in most cases, will reconnect themselves in the future, meaning either the price of that asset will slow down in its speed and allow that 9 EMA to catch up, or the price will immediately pull back down into the 9 EMA. And that's what we need to know, because that's the biggest power of it. Now, some of that might sound too much lingo, but I'm going to show you what I'm talking about right here on the chart. So let's go back to our intraday NASDAQ chart and take a look at how a separator trade develops in a real-time market. And you're going to see why this is my favorite way to make trades. So let's take a look at this point right here, and you'll see at the very low tail of this wick, the price of the NASDAQ was 22,800. Now, this chart can't do it right now, but I want you to do your best to visualize that this candle was once full-bodied red, just like these two previously. But at this point, notice that the distance between that price and where the 9 EMA is more than 120 points. Now, this is not a video where we're using any excessive indicators like range or RSIs to enhance that. We're just doing the basics. But I just want to show you, anytime you get that far away, the knee-jerk reaction of whatever instrument you're trading is to try to reclaim that at some point. So what will happen in a situation like this, once it's become that far, it no longer becomes a great sell, or once it's separated above that, it no longer becomes a great buy. You must wait for that retest to get in. So it keeps you out of the really bad trades. Now, in this one, I would have entered early, but I would have done so and been more of a buyer here, because my thinking in this case would be overextension, because it's moved too far away from that 9 EMA, and I would at least be playing a reconnection of. Now, I've done a John Wick video before. This is what I call that candle. I'll post that video up on the screen for everybody, but I would be getting in about 22,810, maybe 815. And then I would be looking bare minimum to reconnect. Stop would be underneath of the low. So I just want to kind of play it forward, and I want to show you what happens along the way here. Let's just kind of move a couple of bars forward here, and you'll see that's exactly what it does, is it reclaims that 9 EMA. Now from here, you definitely can make that entry again. So take a look. I want to highlight this to show you where the safer entry is, just so everybody can see. Take a look at that bar right there. That was the official confirmation of that cross. Remember, now that would be what you would call the buy, right? The buy cross sell. But it's kind of late in that cycle after three candles and a bounce. So what you would need is this candle right here. Notice it just kind of crests that 9 EMA again. You may have that question about what do you do if it's just kind of hugging that 9 EMA? And that's okay if price slightly dips below. As long as the candle stays very, very close to that 9 EMA, the current trend is intact. So you could re-enter it right there off that 9 EMA. But if you take the separator, notice that you're 120 points ahead of the game, right? And now you're just riding that 9 EMA up as an exit strategy. So let's kind of play it forward, right? Notice that it's still kissing along there. So again, for the traders that may have been late to the party, you can still work your trade by changing it back to the buy, sell, cross method. But it pays to get in those off that separation. That's one of my favorite. Now, before we jump into these live trade examples, let's just take a quick review of what we learned up to this point. So while you see these live trade examples in action and how they were managed in our live community, you'll be able to understand why you would take that trade in the first place and what to expect out of that trade, at least the basics, right? So the first types of trades that we often look at for the newer trader, the primitive version, is as long as the asset is underneath of that 9 EMA or above that 9 EMA, you should stay with the trend because the 9 EMA, is the ultimate trend dictating tool. It lets you know who's in control. So you're going to see how it wants to connect with that. As I said, my favorite trade is the separator trade because I know at some point, combined with other things that I use, I know that once we get that separation, much like I did with the VWAP video, when you get that separation, the tendency is to try at some point during the day to reclaim that. And that's where the large types of trades take place. So let's move over and take a look at some of these live trade examples using the 9 EMA. So the first trade we're going to talk about is one taken here recently, RKLB. Now, just to kind of test your knowledge, it's okay if you get the answer wrong. That's fine. We're going to talk about it. Based off of the chart you're seeing right now, as you just kind of woke up, that's the chart you have. What do you think you should do, or what do you think that I did at the moment? Did I buy this? Did I sell this? What kind of trade, based off the information we've discussed in this video, would I be taking here? Now, hopefully you said sell. And hopefully you see why I would say that, because what do we have here? We just talked about it. We have the classic separation between the current price of the asset and where the 9 EMA is. Now, when you get that extension, that's the probability is it will re-kiss that 9 EMA. But in this case, if you guessed short, you guessed right. We sold this. I'll put this stuff right up here on the top. And of course, the target now becomes, because a lot of traders struggle with targets, the target becomes revisitation of that 9 EMA. So when we kind of play that back, what do we end up getting? Immediately, you notice that the price comes back down into that 9 EMA. And that's a pretty good distance. That was only a one share example there. I'm just going to go ahead and close it out so it doesn't make a mess. But that is a separator trade. Now, let's take a look at another version of this using the 9 EMA, another recent trade made, by the way, today in Q using that 9 EMA. Now, if you take a look at this chart right now, we have clear separation. Now, in this case, showing you the value of the 9 EMA, I did not jump in on the first cross. And once it got through that, I did not want to chase the price, much like that example. Now, I could have chased the price, but I didn't want to because I wanted to wait for that second candle confirmation, correct? Now, if I just kind of move this forward, I want to show you what this next candle looks like, and why we wait for those confirmations in this case is because we don't know what the next candle will be, which means this one was a separator that moved back over the top. And once it crossed back up over the 9 EMA, it became a long. Now, the management of this trade becomes that 9 EMA. Because the stop loss in this case would have to be at the low of day based off of technicals, rather than risking that much, we can just use that 9 EMA as a stop loss and even a profit trailing guide. So I wanted to kind of walk you through that so I don't confuse everybody. If you kind of just move a couple of these bars forward, notice that even though your trades may often be choppy and bounce you back and forth, right? Notice that each and every time you get a clean shot at that 9 EMA, it's like an algo program just steps in there and buys, just steps in there and buys, just step there and buy. So you don't always have to be the first in. You can always wait for that confirmation. So in this case, you have it clear without a doubt. You have what? You have a buy, cross, sell event. And you're going to stay with that trade until it finally crosses over. So if we just kind of move it forward here just real quick to save some time, you're going to see, what does it do? It just kind of walks away from that 9 EMA. Now, take a look at what happened. This can also help you with targets. What was this? It became separated from that 9 EMA, correct? So in a separation case, I would go ahead and take the profits from that trade, because in this case, it's most likely to pull back to this 23,516 or thereabouts before it rebounces. And I would want to book that profit and then possibly rebuy. A couple candles forward, you tell me what you see. Take a look at that chart. It's about as plain as it can be. It walks right down once it's separated, moves right into that, kisses that thing, and then rips right again. So as scalpers and quick day traders, we would take that profit on that separation. If you're fast enough, you could have shorted it using that 9 EMA as a connector, or just sat back, rebought the thing off of the bounce. So I hope you understand at least a little bit better than when we started how the 9 EMA works. I'm sure a lot of you out there are experimenting with this, and maybe you've never looked at it in this light, and that's hopefully it helped you. Now, obviously, when we're talking about trading, I think you know as well as everyone else, and I do, there's so many variables and other things that you can add. But if you're a new trader, I want you to just kind of keep this in your mind as you move forward. If you never come back to this channel or watch anything again, everything is a process. You must start small and internalize each individual step. So starting with just reading the 9 EMA, just reading that 9 EMA, the important thing for you to do is understand how it moves above and how it moves below, how assets tend to hug along that, and how it develops into trends. Trust me, after watching this just solely for a couple days, you're going to see the markets or whatever you're trading in a completely different light, and that's what's the most important part of this process. From there, take a look at those separation moments. See how each market reacts as it starts to extend. You run into those short-term overbought, oversold conditions, which opens up opportunities for the scalper or day trader. So anyway, I think I've said enough. Kind of got a little bit winded there, but you know what? I love this stuff. I love trading. I hope I'm helping you learn how to trade. This is my life. I want to make it yours too. As always, I want to remind you before I sign off officially that each and every week, let's say you're struggling, you're looking for fantastic ideas, a baseline to start to eliminate the confusion. Each and every week, my wife and I put together a very comprehensive, detailed market report called the Gains Guide. We begin by breaking down all the major markets, both technically and fundamentally. We also take a look at the very best stocks for that week, the ones that have the best opportunity to make trades. It's completely free. We send it out every weekend that we got plenty of time to read it and sift through it and pick out those best opportunities before the Monday session starts. Again, it's completely free. All you got to do is go down there in the description box, click the link, put in your email, and you'll have the next copy. Plus, you can go back and read the next copies and see how this thing actually works. Again, it's called the Gains Guide. It's completely free. As always, guys, thanks very much for watching this video. Take care. Trade well. Until the next time, cheers.